Hi and welcome to the Market Alert for Friday the 11th of August 2023. So yesterday we saw soft CPI, sloppy auction and sudden Iran deal spark market chaos. A quiet, illiquid summer day which saw oil pump and dump bond yields drop and pop, stocks spike and puke, gold jump and slump, and the dollar purge and surge. Nice bit of rhyming there for you. Kick off your Friday. So that was a summary of what happened across the markets. US stocks eked mild gains after knee-jerk dovish reaction to CPI unwound, which saw the markets moving low. Dovish CPI reaction and wine yields hit high after weak auction. So yeah, we saw those numbers, didn't we, yesterday, and what a joke, as can be seen here. Let me just pick them out for you, all there in red. And you can see there 3.2, 3.3, utter joke. But yeah, that's the way it goes. It's the summer, keep the markets quiet, and we don't want to disturb too much of the status quo. But certainly coming, there seems to be cracks appearing everywhere, so like the calm before the storm. Talking of the dollar, let's just have a quick look. This, as it said, it dumped and then it pumped. Moving back to the upside, and obviously the opposite for the metals. But let's kick off with the Dow and have a look at that, see how it fared during yesterday. So as we can see, the market obviously moving higher on those CPI numbers and then coming back down, and overnight also showing weakness at the moment for the Dow. There's the pump and there's the dump. Big move to the downside there. Let's just have a quick calculation. 1, 2, 3, 400 points. It is a big fall considering it's only just getting to mid-August. So yeah, it's a big move on that news. Market sideways overnight. Needs to get back above the close, but watch the low for all of these stock markets as we move forward through these. Let's have a look at the DAX. So in the DAX yesterday, managing to close back above the 5 MA in the daily chart, so sideways, managing to take out the highs of the previous day as well with the news, as you can see there. We did move up to begin with and then it dumped, and then we moved again with the news of the CPI numbers, and then the market dumped again before the Dow closed. I mean, the cash market had closed at 4 p.m. or 4:30 p.m., which is around that bar there. So the rest of the move is to the downside, was created from the overnight or late evening. Overnight, the market down below the close in DP. Watch the low of yesterday, and also we're now back below the 16,000. The market's struggling to stay above 16,000, which is this red line here, so watch that. Overnight you can see the market down in the 5-minute chart, and if we just drag across you can see that down move as well in the evening. And yesterday the reaction to the news, which you'll see there, the market moving to the upside before then running out of steam. There's the immediate reaction, up, down, and then turning around. And yesterday morning, we, instead of the normal shakeout below where the market's currently trading, we had a bit of a different one yesterday. The market just moved higher, and then this became support for the market. And that level was 15,900. Like I say, 16,000. If you look here, you will see that the market struggles to stay above this 16,000 level, becomes resistance here, and then the market moves lower. So let's have a look, and let's just go to where we are currently, and just squeeze this up a bit so we can see where that low is. So we're only about 50 points off the low at the moment. Crucial area. Fridays they like to bring the markets up, but there's always an exception to the rule there. In the S&P, let's have a look at the daily. Same thing. You can see the market starting to struggle. Looks like it's about to fall lower. It's got to take out that 50 EMA, 62% retracement as well. Yesterday, similar picture, up, then sold off. And again, watch the low of yesterday. In the FT100, that breakout from the ascending triangle sort of shape there. You've got to hope that this becomes support at the 50 EMA. If not, you will be looking to see the low of yesterday broken and the market continue lower. I mean, there isn't really anything to move the markets to the upside. It's all bad news. It's just whether they want to, keep levitating the markets until we get to September and the summer holes are over with. But again, we'll just have to wait and see on that one. So as I've said, the metals continue to get crushed. It isn't over yet. There's going to be a massive shakeout on this one. That's how it ends. And this certainly down to that 22 level there and possibly beyond. And we'll look at that next week. We'll look at the monthly chart. Let's see how low this joke of a market and manipulation can actually go. But there's somehow I've got this funny feeling they haven't finished with this yet. There's going to be a massive shakeout to keep the price down. 30-minute chart, you can see the volatility there. Watch the low today. It's likely to be taken out, and then we move down to 22. Wouldn't be at all surprised if we don't do that level today, to be honest with you. And in the gold market also being crushed as well, because central banks continue to buy gold, and there's the reaction yesterday. Bang, and down we came. So until we get a higher inflation number, again, forecast 3.3, comes out at 3.2, enough to crush the metals. That's the idea, and keep the dollar strong. And finally, in the gold-silver ratio, starting to get into a bit of a sideways move, but we're heading back up to certainly to 86, if not a lot higher. There's the range I was thinking of, where it is about 90, 91 is the area where you'd expect this next move to blow out. We've got the 86 and this resistance here, but for me, it's going a lot higher, because as it starts to get the carnage back in the market, silver comes under attack first and foremost, which is fine by me. I just keep buying more as the price drops, not a problem. And I mean physical, I don't mean with regards to derivatives. Okay, that's it for this one. Have a great weekend, and as ever, thanks for watching. See you in the next.